All right, without any further ado, I want to welcome everybody, despite the minor technical difficulties, to Business Done Better. I am so excited. Today is a special day. This is the first installment of this series. It's something that we're going to be doing in perpetuity. For those that I haven't had the pleasure of meeting yet, again, this is Business Done Better. And in this platform, we are here to do three things. We're looking to empower entrepreneurs by partnering with them to help them get clarity, gain traction, and grow thriving businesses. And today, we're talking about money matters. I am so excited to welcome to the platform two brothers that I have had the opportunities to develop relationships with, both personally and professionally. We won't get into all the matters there, but today we're going to talk about some financial concepts. One of the things that I was challenged with 7 years ago when I started my consultancy as a former IT project manager, I really didn't have a strong understanding of financial concepts. I knew that I was a subject matter expert and I had 12 years of experience that I could leverage to do what I needed to do for my clients. But in terms of understanding what it really meant to run and execute a business and do that through a financial lens, I had to learn on the fly. So when you talk about getting it out of the mud, that was absolutely my reality. And so I don't want anybody else to have the same runway that I had. I would love to provide an opportunity for folks to get some information, understand some of those basic financial concepts so that you can grow and scale your business based through that lens. So without any further ado, I'm going to welcome Armand Kadima to Business Done Better. He is an intuitive accountant with 20 years of experience working with Fortune 100 enterprises and growing businesses. As the founder and managing partner of Levanter LLC, Armand specializes in advising entrepreneurs and business leaders on how to successfully navigate the financial intricacies of scaling and sustaining successful ventures. Armand, welcome to the platform.
Pleasure to have me, Bobby.
Awesome. And then next up, I'd like to introduce Jonathan Quarles. Jonathan Quarles has had a long-standing passion for building businesses and creating change. As the founder and CEO of the BTL Group, a business development and relationship management platform, he has unlocked more than $400 million of value for public and private organizations, positioning them for sustainability and growth. As founder and CEO of Quartz Water Source, his latest entrepreneurial venture, he is working to expand access to clean water around the world, a mission inspired by the water crisis in his hometown of Flint, Michigan. Quarles is a spokesperson for the U.S. Department of State and has been honored by Forbes, Black Enterprise, and Crane's Detroit Business Magazine. He currently has a book available, Making Dollars While Making Change. So, yes, folks, he is an author as well, half memoir and half playbook for entrepreneurs who strive to build socially impactful businesses. Armand and Jonathan, welcome to the stage.
As you were making that introduction, I'm like, who are you talking about? Like, I don't know who that person is, but
It's crazy, man. Sometimes we look back, and this is part of what I won't give too much of a preview of what we'll be talking about next month on this stage. But I think sometimes as entrepreneurs, we're constantly on the go. And so sometimes we look back and it's like, wait, is that real? Like, did that actually happen? Was I actually able to create that change, or did I actually take that L and survive? You know what I mean? So I think that's sometimes that could be a real actualization, no question. So fellas, I want to jump right in. I think, when I think about our respective audiences and people who may be looking to get some more information, right, around, hey, I'm starting a business, I'm fresh out, um, kind of have an idea of what I'm doing. I have a great product or service, but when I think about things like a profit and loss statement or a balance sheet, I really don't know how that translates into information that I can use to make effective management decisions. So the first thing I want to ask, my question for you, Armand, is if you can kind of share from a business owner perspective, but also as an accountant, what are the most important financial statements that you feel small business owners should be familiar with?
Fantastic, Bobby. That's a great question. As an accountants, our objective is to help entrepreneurs fully understand the numbers within their business, right? How to translate the results into data that they can utilize to make decisions to grow and scale their businesses or reach whatever long-term objective they've established for themselves. So there are three main financial statements that you should be aware of. Number one is your profit and loss statement. That simply details your sales and revenue, the expenses, and then your profit, right? And then you have the balance sheet. And in layman's terms, the balance sheet is simply a financial statement that details your assets, your liabilities, and your equity. Essentially, the whole objective is to determine your net worth, right? The net worth of the business, as far as how many assets is accumulated, what the liabilities are, and what the ownership stake is in the business. And then thirdly and lastly is the cash flow statement. So cash flow statement allows you to be able to analyze your cash as your cash comes in from different sources, from either from your operating operations, cash from your financing operations, which could mean um, anything coming from loans or any type of funding on credit cards and such. And then you also have financing activities as well, investing activities. So you have operational activities, investing activities, and then financing activities. So investing activities are cash flow that you put in or other investors put into the business. Those are the three major financial statements, and being aware of how they impact your business and how they help you analyze and we get clarity as far as your performance and how to reach your long-term objective is critical to the success of a business.
No, I thank you, Armand. I think, you know, let me double click that just a bit. You mentioned the P&L. Look, I'm already abbreviating the profit and loss statement, the
Correct.
balance sheet, and your cash flow statement. If I am somebody who is just starting out, right, and I'm like, hey, I don't even have a QuickBooks subscription, right, or FreshBooks, whatever your respective accounting tool may be. If I think about those three things, right? If let's just say I'm in Google Sheets and I'm tracking my expenses, I'm tracking my income. What are some of the things, or what are some of the metrics, if you will, in say a profit and loss statement that would give me some level of indication of how my business is performing?
Yeah. So one of the best things you could do is, if you're looking at your profit and loss statement, is to fully understand what your gross margin is, right? So you have three major sections to your profit and loss statement. You have your revenue section, which details your sales, how much money you're making from your clients or your business operations, right? Then you also have your cost of goods sold. Essentially, it's the cost of services or cost of goods sold. So that portion details how much it costs you to be able to provide the services to your clients or to your customer base. That is a very important facet of your business because that helps you determine essentially how to price your services or your products to make sure that you at least are profitable. So when you take your revenue less or minus your cost of services or cost of goods sold, you come to what we consider your gross profit, right? Your gross
Mhm.
profit is considered top line profit. Top line meaning that it's above the expenses, which you call the selling, general, and administrative expenses that are necessary to run and operate your business. So one of the most important facets is understanding what your gross margin is, right? Ideally, every business should aim at having no less than 50% gross margins on.
That's a bar.
Yeah,
That's a
exactly. No
bar.
less than
Yeah.
50%, right? Because ultimately you want to be able to ensure that you're making a profit, a good profit on the services and products that you're offering your customer base. So you have enough left over to cover all your other expenses, such as salaries, office space if it's necessary, website, these other things, advertising, marketing, and such. So that's probably the most important and critical facet that's fundamentally important for a business to succeed is to understand and make sure they have a good profit, good growth margin. Then
Yeah.
the next one is your ultimate your profit margin, which is your profit or your gross profit. Um, so that's what not gross profit, but your actual profits, right? Operating profit, which also
Yep.
then formula there that called the profit margin. So when I say margin and then I say profit, margin is the percentage, right? So we utilize
Hmm.
margin percentage where you divide the actual number by the sales figures, right? That then gives you the relationship between your profit, whether it's gross profit or net profit, in contrast to your actual sales. That's what we consider margin. So, for example, if you want to determine what your gross margin is, which is a percentage, you subtract your cost of goods sold or cost of services less from your sales, that number that you get is considered your gross profit. Divide that number by your total revenue, then that gives you your gross margin, right? And then
Got you.
same with your net profits. You divide once you have your gross profit, you subtract all your expenses from that, your operating expenses from that, then that gives you your net profit. So you divide that number by your revenue or your sales, and that gives you your profit margin. So I just want to make sure that I'm clear as far as articulating what those things are and why I'm using the terms margin in contrast to identifying what your gross profit and net profits are.
No, I think you did a great job of distinguishing the two. And I'm going to come back to that because I think one of the things that's important, aside from breaking down and understanding how those numbers are calculated, I think the other piece that we also need to have context around is how do we know what percentage is good versus not, right? So I'm going to come back to that in just a second. I'm going to transition to Jonathan and see and get some more intel from your perspective. So Jonathan, you mind if I call you JQ, man? Is that all right?
Please. I'm like, who is Jonathan?
So JQ, one of the things that I think a lot of people also are challenged with, especially when they're first starting out, is figuring out pricing, right? So as an entrepreneur who's dabbled in several different lanes, right? Services as well as products, give some context around how you typically would approach pricing. What methods have you found to work well for your respective ventures?
Yeah, so that's a good question. And again, I'm speaking specifically to small business owners right now. The reality is, as a small business owner, you don't have a lot of capital. Most small businesses don't have just a lot of cash flow, to
Sitting
float.
around,
And
right?
so you have different, you have cost-based pricing, you have value-based pricing. And, obviously value-based is what is the perceived value that the customer or client is looking for. And cost
Right.
is how much does it actually cost to make that product or the service. And then you add your margins or, your margins to that. Um, the pricing model that I normally use is more of like a hybrid approach, right? So on my consulting company, which is a service-based business, um, I have a retainer, which is the cost of this is for my time, this is for my resources, this is for access to me. And then I also have a success fee, which is more of that's value. So I have benchmarks, and every deal that I close, there's a percentage and there's a tier percentage, which actually motivates me, and it actually is motivating to the client. I've had clients to try to say, hey, I only want to do commission based, and we'll give you a lot of great upside on the back end. As a small
Right.
business owner, you don't, again, I have employees, and so I have to pay them. They don't care. At the end of the day, every month they're getting, paid from me. And so I have to make sure that I'm able to do that. So for me, what I found is that in the businesses that I've had, especially on the service side, to me, it reduces the risk, and it also kind of puts skin in the game for everyone, right? Because most people don't understand that maybe I can make a phone call, and that one phone call can actually set up an opportunity for a deal. And that's just one phone call. And for my client, they may look at it as, oh, that was just a quick phone call. Why do I have to pay you for that? Well, what you don't know is that it took me 10 to 20 years to develop that relationship so
Yeah,
that
that
when I
game.
call, they
That's right.
answer. And I know
Hmm.
how to actually undo knots, because I'm hired to kind of fix things for clients or to help undo
Sure.
knots, particularly in the government space. So
Right.
I always recommend it for small businesses to look at everything from a hybrid approach. And you have to be very creative sometime with the pricing. And Bobby, you and I talked about this last week when we were together. You have some clients and customers that can't afford to pay up front. And so you just have to be really creative in negotiating how you actually I always say, always, always, always take yourself, the value of who you are and the value of your product, and add a tax to it. And
Hmm.
as a smart, most of the times, in particular, women-owned companies, they undervalue themselves and their services and their product.
Right.
And I always tell people who I mentor, and even friends of mine who are women-owned businesses, is that you always have to look at yourself as a business, and more important, the biggest and the most important thing is your time and your effort. And so, looking at creative ways to create pricing structure is something that I always encourage entrepreneurs, particularly small business owners, to think through.
No, I think that's so important, man. One of the things that you said that jumped out at me, and I love the way you phrased it. I don't think I've ever heard this before, but not surprising coming from you. Success fee. I was like, this dude coined the term. I love it. But when I think about what that means, in not just in the terms of a deal, but also considering the audience, right? There may, to your point, there's not a lot of capital laying around and everybody's trying to grow. So from a performance perspective, it may make sense to incentivize the engagement in a way that ensures that there's a win-win. When you eat, I eat, right? Of course, we're going to make sure that my costs are covered and that you're paying the value for my respective service. But if I am able to help you to elevate and grow your business in a way, or if I improve performance and save some costs for you, increase your profit margins, as Armand was just talking about, there should be some level of a fee that's associated with the success that I was able to create. So I want to connect the dots real quick based on what both of you just shared. So based on what you talked about, JQ, from like a pricing perspective, my question for you, Armand, is when if I'm an owner and I am considering, my pricing, right? What does a healthy margin look like for my respective business? Or does that differ depending on whether it's a product or service, or depending on what industry we're in, that kind of thing? How would a business owner be able to clearly, or have some confidence rather, that the price that they've set is actually a good price for the future or the health of the business?
That's a phenomenal question as well, because a lot of businesses struggle with it, especially startups, right? Being able to understand and actually have confidence in knowing that whatever prices that they're going to set are maximizing the offer that they're providing to the marketplace. Ultimately, it always starts with your costs, right? Your cost to deliver that product to your customer. Whether it's a product or a service, you have to make sure that you are able to quantify and identify every facet of cost associated with making that product or providing that service. So ultimately, you have to make sure it's from a product perspective. There's a lot of facets that go into the product. So there's things such as if you're manufacturing a product, there's there's cost there's cost of there's cost of labor and the cost of actually the supplies and the ingredients to make the product, right? So you got to make sure you fully grasp and compute rather, all the costs that go into actually making that product. And then there's also costs to deliver that product to your customer, whether it's shipping, whether it's packaging, whether it's going through some type of intermediary. So once you're able to quantify all those costs, you then have a benchmark for you to be able to say, okay, how much can I actually mark this up to where to where it actually is in alignment with the demand on the marketplace, right? Because with every product that we sell or provide, there's always some type of competition out there, right? And also, so what is the competition selling the product for? What is the actual demand on the marketplace? And is there some type of a bench line, right? Or a value point to where you believe that your customers, and a lot of times you begin with yourself and your close surroundings, where they will find value in paying that particular price for that product. So, but ultimately, the baseline is you always want to make sure that you're at least at 50% gross margins, which I mentioned earlier, which means that if it costs you $1 to make a product, you should minimum sell it for $2, right? You should at least double, right, what your costs to make that product deliver service. That's typically one of the best metrics that we use. A minimum 50% gross margins, meaning that if it costs you, like I said, if it costs you $1 to make it, sell it for $2. So going back to that example that I mentioned earlier, so if you take $2 as your revenue, you subtract the $1 cost from it, you get $1, right? So if you divide that $1 by 2, you get 50%. That's how that margin is calculated, right? So at minimum, you should always be at 50% margins. I've seen some businesses to where it's like upwards of 80%, 90%, which is phenomenal. But some of those businesses also may have a larger SG&A cost structure because they have labor, or they have certain type of software or subscriptions or infrastructure management that they need to be able to deliver that product. Yes, go ahead, JQ.
Oh, were you done? Because I just want to jump in.
Yeah, please jump in. Yeah.
So one of the things, and we're talking about small business owners,
Correct.
one of what products and services, this is thing called cost of doing business, right?
Exactly.
There are times, and I found this to be true, where when I was working in corporate America and I was the top sales guy and all that good stuff, and when I went out on my own, I was like, oh, I know I can do this because I mean I have relationships, people bought for me, I have big clients and things like that. But then when I went out on my own shingle, it was a different kind of thing. So I went and I did my market research to see what my value, what the cost of me doing services, and then I put my margin on it. And I remember going to my first client and saying, okay, this is how much I require to get started. And it was like, whoa, that price is too high. But that was the market price. And because I'm a
Right.
small business, I'm sure most people deal with this, is that they look at you as, okay, you're a small business, so I'm going to give you a discount in what I feel as though is valued as, opposed to if you were talking to Deloitte, you wouldn't negotiate prices, a $500 an hour retainer, right? So
Exactly.
sometimes,
Bar.
so when we
Yep.
talk about this, it's like there was, when I first started my consulting company, I had to do a lot of work upfront for free for at least 30 days to prove value, because
Exactly.
I knew what I could do, but I had to, this is the cost of doing business. So this is the thing that you have to think and consider. And then, that first 30 days, I said, these are the benchmarks, I'm going to do this in 30 days. You tell me after 30 days, I reach these benchmarks. Then the next month we'll do a 3 month, we'll do a 6 month or a 12-month retainer of services. And sometimes as small business owners, you have to do that, even with your product. When you're trying to get your product out to the marketplace, sometimes you have to look at strategic markets where you can, when I say donate, I hate to say that word donate because it is a tax write-off. And if you're thinking about tax strategies,
Correct.
if I have a phone, I'm not going to say what phone this is, but if I have
There you
this
go.
phone and I'm trying to get this phone in the marketplace, now I would say the name if they were a sponsor of this show, but they're not. I'm not giving them no free product advertising.
Bars.
But this particular phone, I may have to, in my strategy, and as I'm thinking through like my overall strategy for the company, I may say in this year, I am going to donate maybe 10 to 20 of these phones to strategic key providers, so that I can actually potentially get it out in the marketplace and marketing, things like that. But that's the cost of doing business. So some may look at it as, I just donated 20 of these phones, which cost, let's say, $400 for this phone. So that's the things that, as sometimes you have to provide value up front, even though it's not actually a monetary return at that moment.
Yeah, that's a great point, JQ, because that's also another form of actually marketing, right? Or promoting your products and services, right? Being able to provide a product, like I said, a free charge or free product or free services for a certain period of time. That's another form of actually marketing. So that expense or that cost is actually can be attributable to your marketing or promotional costs, or some and if you get more intricate, it could be you consider your customer acquisition cost.
And talk about how
Mm,
important that is, Armand, as it relates to tax strategy for the business.
Yes, exactly. So when you're donating or giving away these products, especially if you're profitable, right? If you're a profitable business from the get go, if your margins are phenomenal, it'd behoove of you to be able to leverage the ability to provide free services or promote free products, because ultimately you could deduct those from your bottom line to give you a lower profit line that you're taxed on from a tax perspective. So that ultimately limits your tax liability, because you're strategically are utilizing your products or your services to be able to promote your product but simultaneously receive a tax benefit from it.
man, listen, that in and of itself, I appreciate that live, JQ. I think being able to kind of highlight and elevate the importance of what our mind just shared from a tax standpoint is really important. And I actually want to pivot to tax for a second, because I think, especially coming out of what 2 weeks ago now, many of us were submitting, rushing to try to get to the deadline, get our taxes in. Corporate taxes were obviously do well before. Armand, I would love to get your perspective and kind of share a little more. And don't give away all your game, but tell us a little bit about just some ways that you found that small business owners can reduce their tax liability. And let me frame this up a little more. Especially now in the information age, we are always being onslaughted with, information. Well, this is a write-off and that's a write-off. But if I'm more often than not, a lot of the business owners that I engage, they have no idea what that actually means. Like, what
But
is an actual write-off? So the first question I guess I have is, can you just define for the audience what a tax write-off is? And then if you want to share just a couple of things that are typically overlooked within a tax strategy that might help to reduce their tax liability.
awesome, awesome. Yeah, there's a lot of misconceptions and a lot of misinformation out there when it comes to um, tax strategies or tax deductions or tax benefits, right? So there are two major terms you brought up are deductions and write-offs, and those are a lot of times used interchangeably.
Yep.
A write-off and deduction are so from a business standpoint. We're going to address because right now I think most of our um, audience is entrepreneurs and business owners, but from a business perspective, you have deductions, right, which are essentially items that you could deduct from your income to reduce your profit, right, from a tax
Mm,
perspective. So, as a business owner, anything that you have to incur as an expense to run your business is tax deductible. Depending on what it is, there are limitations though, right? Depending on what it is.
sure.
But anything that you have to incur or obtain for the purpose of conducting your business is tax deductible, right? So that's just something we have to just kind of establish a baseline on.
Yep.
Um, Write-offs are essentially the same thing on a personal side. So every business owner, depending on how you're structured, if you're structured as a sole proprietor, C corporation, if sole proprietor as a Schedule C, or if you're set up as a partnership or as an S corp or a C corporation, ultimately some of the income that your business generates passes on to you as an individual, as the owner of the business. And when profits are passed on to you, you then have the ability to write things off, write-offs, right? So
Mm,
you have deductions, which are business deductions, and then you have write-offs, which are things that you can write off on your personal tax return to help limit and minimize your tax liability. And those things include such things as your mortgage interests on your personal property, right? There are things such as charitable contributions that people donate money to their churches or local charities. Those are examples of write-offs. Those are things that you could then write off on your personal tax return to help reduce your tax liability on the personal side of your business. And deductions
mm,
are more on the business side. I just want to
gotcha.
clarify the two, like you asked to
No,
clarify.
that's important because you're right. They are used interchangeably. I probably
Yeah,
used them interchangeably just in my question. Go ahead, man. I'm listening.
exactly. So, when it comes to tax mitigation strategies, a lot of times what I share with people is that if you're a profitable business, right, the best way to really mitigate your tax strategy is to be able to leverage the cash that you're making from your business. So as
Mm,
a profitable business, the best thing that I could advise people is, so for you to get deductions, right, you have to understand that for you to get business deductions, you actually have to spend the money, right, and
right.
put it somewhere. The cash actually has to flow. Money has to go from, let's say you're going to write off $100,000 of marketing expenses. There actually has to be $100,000 that leaves your bank account and goes to a marketing place, a marketing agency, a marketing consultant, or products and services. It has to go somewhere. The money has to flow. You just cannot have
Mm,
deductions that are not substantiated by the flow of money, right? So that's one thing people have to understand. People want to be able to get deductions, but don't want to spend the money, and it doesn't work
mm,
that way, right? You actually
bar.
spend the money and move it somewhere. So one of the nugget that I could give people on this call is that one of the best things you could do is acquire tax deductible assets or tax deferred assets. So generating wealth has to do with the acquisition of assets. Wealth is not determined by how much money you have in your bank account. Wealth is determined by the assets that you
Yes.
actually the assets that you
Yes.
actually own, right?
That's right.
So, for example, if you have a $500,000 profit, you're expecting anticipated $500,000 profit. Well, you may get taxed 30, 40% on that, depending on where you are. So you might end up having to pay the IRS anywhere between 150 and your state agency as well, anywhere between 150 and $200,000 on that 500 grand of profit. So
Mm,
instead of paying all that money to the agencies or the IRS, use that money to actually acquire some type of tax deferring or tax deductible asset. What I mean by that is it could be if you're a restaurant, you may need to go upgrade your kitchen equipment, right? And then you could write off that equipment immediately, but then that adds value to your restaurant, right? If you are a construction business, right? You go same thing, go buy equipment. If you're in the transportation logistics space, go buy a new vehicle, right? These things are actual still assets, but they allow you to be able to deduct the full value of those assets from your tax return to give you that benefit to where the money is not just being spent. You could go hire more people, incentivize your employees, give them a year-end bonus, right? These are the people. People are considered some of your most valuable asset in your business. Invest into your people instead of paying the IRS, right? We're going to pay the IRS and the federal agency something. We're not. So tax evasion is illegal, right?
Let's be clear, right?
Right. But tax mitigation is extremely legal, right? Because that's part of implementing a strategy to help you minimize your tax liability by using the tax code to your benefit. So as long as you're acquiring tax deferring and tax deductible assets, then you ultimately set yourself up for success because you are ultimately investing that money to acquire assets and also goodwill from your employees or your people or your consultants. Hire consultants to help you create strategies for the next year, right? Investing the money into your people, into your assets is what ultimately creates more value into your business that will propel you and put you in a position for success down the line. One last thing I'm going to say is a lot of people, I've heard people say, "Hey, I want the Donald Trump tax return." I'm like, yes, but are you willing to pay the Donald Trump consultants, right?
Yeah.
Are you willing to pay what Donald Trump pays his consultants and attorneys to ensure that he has that particular tax return? So that's something we have to really keep in mind, is that for you to really maximize your full potential of your business, you must be able to engage the right consultants, attorneys, accountants, team members to be able to ensure that you're on a pathway for success and maximizing your full potential of your business.
And Bobby,
huge, man.
JQ, jump in, please.
Yeah. So right now, Armand just really dropped a whole lot of gems.
Man,
and to that point, Armand, I think this is a really, really key and critical point for any business owner, whether you small, medium, or large, is
Correct.
that you have to invest in a quality, qualified, certified, full of integrity accountant, CPA.
Yes.
Period. Let me stop right there. One.
Yeah. Let that sit for a second. Right.
Because what I find is that a lot of times people that bookkeeping, having a person who actually understands the tax laws and the tax loopholes.
Correct.
Most people like to go to, the ones you can get your taxes done in, like, for $100. You're going to actually get what you pay for in those things. And with lawyers, I've had experience. I had a lawsuit with a former partner for 2 years. And because I wanted to cut costs on the front end and said, okay, I'm going to have my friend look at this contract. And if I would have had a really qualified subject matter expert on this particular deal, I wouldn't have been in court for 2 years. I would highly recommend that first and foremost for companies that are doing more so services businesses. You may not have equipment, right? So I put the car that I actually lease is in one of my company's name, right? My oldest daughter is on my payroll. So, I can pay her, I think it's like $12,000. I forgot the new number is, but I give her $12,000 every year. She earns that. She has a role in the company. She's 10 years old. And that's totally legal. And so what she does is I'm teaching her financial literacy. So the way I'm teaching her is that she's learning work ethic. She's learning, and she started from the bottom. She does administrative work. She's not like the CAO or anything like that of the company. She literally does filing. She types stuff up for me. She does all of these things to learn the business. But then she gets $12,000 a year in salary. That money then goes into her long-term savings when we talked about the tax deferred. And I max out in all of my long-term investments, the tax deferred, whether it's, a Roth or a SEP and things like that. Those are ways in which those are tax strategies. And for business owners, we got to start thinking that way. Yes, I don't pay myself a huge salary, but that's a whole nother strategy. There's a reason why I don't pay myself a huge salary, because I want to remain in a certain tax bracket. And then I have, as a CEO and 100% owner of one of my companies, I'm able to draw on that, which is actually not it's not it's actually tax. What is the word I'm trying to use?
Talk
I'm
about
not.
tax deferred.
Yeah, I'm not being taxed on the
Correct.
money that I draw from.
Right.
Excluded,
Yep.
yeah, it's excluded from your income taxes. Exactly.
Exactly.
As long as
But
as long as you're taking a salary, you're allowed
yep.
distribution. They're essentially the distributions. Yeah.
Right. And this is stuff that I learned by having, I mean, I pay a premium for my CPA and I trust him.
Yeah.
He has high integrity.
Correct.
High integrity. So
Yes.
I'm not trying to go to jail for something that he, because
Right.
again, when you mess up on tax returns, you don't want to get in trouble, not the CPA.
Exactly.
Right. And so that's why you want to have somebody like Armand and people who actually know the law, who studies the law, who actually cares about your well-being and has integrity to make sure you provide, you know, the kind of security and information that you need.
For sure. I think, man, God, I hope that the folks who are watching this now or who watch the replay later have a pen, because the bars, bro. Okay. Let's talk about this one thing that you just said, JQ, that I think is really important. And y'all can tag team on this however you want to. I don't pay myself an extreme salary. Instead, I complement my salary with owner's draws as necessary, right? So let's start at the ground floor. Tell me the difference between a salary and an owner's draw. Go ahead, Jay.
Okay. Yeah. So I'll take that one. Thank you, JQ. So depending on how you're structured, right? And most of the times, most small businesses are recommended to be structured as S corporation. So we're gonna talk about this from the S corporation perspective, because as an S corp, you are required to pay yourself a reasonable salary as the CEO or executive of that particular business. And a reasonable salary, a lot of times, is the best way that I could articulate is that if you were to hire somebody else to serve in your capacity, how much would you pay them? Right? Because a lot of times you have businesses that say, hey, they make $2-3 million, but they want to pay themselves $30,000. And I'm like, technically, the code says it has to be a reasonable salary, right? Based on how much you actually pay someone to actually operate in that capacity. So ultimately, you have to say, if you're a $3 million company and you go to the marketplace to hire someone to operate in your capacity, how much would you pay them, right? So that is what typically determines a salary. It's a salary. It's a compensation to an individual for a particular service that you are running payroll, where you are withholding taxes such as FICA taxes, Social Security, Medicare taxes, and personal income withholdings through a process to where you're collecting these taxes and remitting them to the corresponding municipalities, the IRS, and the state agencies, and so on and so forth. That is what a salary in the layman's term is. A draw is simply an opportunity for the owner of the business to withdraw money from the business for whatever purposes, right? So as I just when you're set up as an S corp, you are allowed to withdraw pretty much as much as you want, right? From a as long as the business is profitable, right? I'm gonna have to phrase that. As long as the business is profitable, you are allowed to withdraw pretty much as you need for personal purposes. And then one of the biggest things that people withdraw money for is to actually pay their tax liabilities when they do have one. When you have to pay a tax liability, which is a result of the business generating profits, you then take withdrawals or owner's draws or distributions from the business to be able to cover those tax liabilities. Simultaneously, if you need some, additional cash for personal use or so on and so forth, you're allowed to take those distributions as long as the business is profitable.
Yep. No, that's a great distinction. I appreciate you kind of parsing that out, because I think sometimes, especially from people who probably started their business maybe as a single member LLC, that transition to S corp can be a little tricky, and they may not necessarily understand how that transition plays into their ability to take draws on the business or take money out of the business from a withdrawal standpoint. So thank you for that breakdown. I want to pivot just a second. JQ, I know you have a lot of experience. You mentioned your experience with government contracts. And just because I know you at a personal level, I also know that you have a significant amount of experience, essentially doing business on a global level. So if we can talk about doing business with global entities for a second, I would love if you can just kind of share from your vantage point, what are some things that you found to work well in terms of establishing the relationships, but also kind of getting a foot in as a small business owner. How can someone position themselves to do business internationally? What are some of the first steps that they should be taking?
Yeah, I think the first steps, and I, depending on where you and what market you're trying to go to, where whatever country, it's so important to utilize the tools that we have here. The government provides us with, right? So we have U.S. There's several different U.S. trade agencies that you can use, and every community has that, right? So utilizing and working with your small business SBA that's in your region, they have a lot of tools and a lot of tips and a lot of kind of resources that can help provide you with one information of understanding what the marketplace is in, if you want to do business in Africa. They also can provide you with different tax incentives and different grants and things like that to kind of get you involved in potential trade missions and things like that. Every community has this. This is something that they have them all regionalized, depending on if you're in the Midwest or the South or Southwest. So I would say tap into those things first. Whatever it is, and it depends on your product and your services that you're trying to provide. If you have a product that you're trying to get into, let's say Italy, there's a couple of ways and things that you can do utilizing those tools first. I mean, I always recommend people go and visit and understand what I call culture economics, because before you do anything else, you have to make sure that most people don't do business with people they don't know.
Yep.
And that can be a challenge at times for small businesses because small businesses may not have the funds to be able to travel internationally to do, site visits and to explore opportunities, right? But there's certain, like particular Michigan. I live in Michigan, and in Michigan we have a program where they give you they pay for 75% of your airfare and 75% of your lodging when you're going to other countries to look for business opportunities.
Oh, wow.
Check with your state because it's called a STEP program, and I can't remember what this STEP, STEP. I don't know what that, but if you Google like STEP programs in your state, you may have that. I use that all the time. You can use up to $15,000, meaning you get reimbursed up to $15,000. So you can send your employees. You can only send you and your employees. You can't send like your family and things like that. So, I just went on a trip to Saudi Arabia looking for opportunities and was able to, I paid for everything up front. I applied for this STEP grant for in the Michigan, for state of Michigan. And, I had to submit my receipts. I had to give them the purpose of who I'm meeting with, and it has to be business related. So I got 75% of my money back from my flight and my hotel. So your state has opportunities and programs that you can leverage. And then once you get there, I'm really big on having partnerships. Like, I don't believe in owning 100% of everything. And to be honest with you, it's so important that when you get on the ground, wherever you're working, whether it's in Asia or if it's in Europe or Africa or in South America, you have the first meeting that I have. And I work through our U.S. embassy. We have U.S. embassies all over the world. So, and you tap into that first before you get there. U.S. embassy will then set you up with potential partners that are either consultants or, people that can be your on the ground eyes and ears. You want to have somebody that speaks the language, someone who knows the environment, because you want to figure out a way that you guys can do a joint venture. I do that with I'm in 9 countries, and in 9 countries, I have a partner on the ground so that if I'm having payment issues from the customers that I'm representing, they can actually go knocking on the door and say, "Hey, where's the money?" And the good thing is that, right. And even just sometimes when we talk about currency, the US dollar is still, welcome in most places, right? I know that there's been recent news and there's things that's changing with the with BRIC. Forgot the name of it, but yeah. So getting a partner on the ground who understands the culture economics, who also can help vet companies, because there's a lot of regulatory things that you want to make sure and that's why having a good lawyer, and this is a different kind of lawyer because I have an international lawyer who specializes in international law. That's totally separate from my lawyer that does my contracts or my other lawyers that does my litigation. I have different lawyers for all these different things. And again, you want to do that because you want to make sure that you're not out of you're in compliant, because you can go to jail if you don't understand international laws. If I'm taking money, to give you a good example, I had 3 companies that I was getting ready to close as a client in Russia. And this was right before the war with Ukraine started. Literally, I was about to fly to Russia to kind of seal this deal,
These
and
deals.
luckily, yeah, I'm glad that didn't happen, because I wouldn't have been able to do business with them with the climate that was happening. But I had an attorney that made sure that all of my stuff was, like, from my flight, the places that I was staying, who I was communicating with, because there were some people I shouldn't have been talking to in Russia. Like, you got to make sure you protect yourself, because again, ignorance, it doesn't matter when it comes to when you don't know the law. When it's time for you to get in front of the judge is not, okay, I'm going to give you some grace because you just happened to not know. These are the things, and this is the cost of doing business. I would say that most small businesses, unless you have a product and you have some sort of cash flow, I would say really focus on domestic, or even our partners outside of the U.S. So, like, the different islands and things like that, Caribbean islands, the U.S. Virgin Islands, places that are, like, close, because there is a huge cost of doing business in other countries. And if you don't have the financial wherewithal to be able to actually do it for the long run and the long haul, it probably is a struggle. But if you have a partner on the ground that's doing business already, then if you can help find a way or negotiate a way that you guys can collaborate where you're bringing value to them, then you have a foot in, and then you can kind of grow from there.
Man, that is great insight. Let me double click that for a second. How did you go about finding your partners in those respective places? Was that just as a result of, like, a referral? Was that networking, you on the ground, boots on the ground, meeting people? How did you go about finding and qualifying those respective partners so that you could trust them with essentially your ability to do business in those different venues?
Yep. I leverage 2 things. One, my state government. So I have, every state has an economic development corporation that does this stuff for their state. So it's the Michigan Economic Development Corporation for Michigan. Wherever you all are, Georgia has one. I reached out to them. I said, I'm going to X country. I want to meet these are the kind of companies I want to meet with. They have representative offices all throughout the world. Every state has this, right? And this is what taxpayers pay for. So that's another thing. I'm not paying the state to do any of this stuff. I'm asking the state to set up meetings for me. And so I tell them, these are the companies I want to meet with, and these are the kind of partners that I'm trying to meet with. They'll set all that stuff up for me, right? You want to give it to them in advance, at least a month in advance, to have their people to work it out. I then sit and I literally interview these partners while I'm there. I also work with the U.S. Embassy, which is separate from the state. This is through the State Department. And we have embassies in pretty much every country that we are not in conflict with. And so the embassies are the people that are on the ground. And these are diplomats. These are foreign service officers. They're on the ground. And so they know the community, and they're able to reach out to other businesses and other NGOs or whatever it is. And they can actually help set up through the U.S. Commercial Services Division. So that's helping. They want to, one part of the embassy is to promote import-export opportunities for American companies. So they have access, and then they also can tell you the tools. They can give you, these are some of the grants, or these are some of the tax incentives that we can provide if you actually are doing business or doing import-export. So those 2 things, your state economic development organization, and then the U.S. Embassy. And you can literally Google all of this stuff. You can go, if you're trying to do stuff in Italy, I keep saying Italy because I'm working on a project right now in Italy. You can literally go in and say the U.S. Embassy in Italy, right, in Torino, Italy. And you have all their contact information. You can email them saying, hi, my name is Jonathan. I have a business. This is what my business does. I want to meet with these kind of companies. Can you help me set it up?
Wow. And then they broker those connections on your behalf
for free. That's no charge. Now you have other folks, again, and this is the thing. We're paying for this. This is what we pay taxes for. This is what we pay federal and state taxes. But the problem is, you have consultants on the ground that charges. I have friends that are partners that charges for this kind of stuff, and they basically do the same thing that the embassy and the state government does also.
No, that's awesome, man. I think these are the kinds of things that people just don't know, right? Like, it's available it's literally a free resource that, when I say free, but that we're paying for with tax dollars, that kind of, which has been a common thread through this conversation, is the reason that that works, or that opportunity is available, is because there's a win-win. There is an incentive for being able to do business with some of these different international entities. And so if that's something that you can leverage and tap in, why not? Right? It's there for you, as long as obviously you can present the business case and the value proposition to support it. But um, that is great. And also, for those who are watching, I put that STEP program that you mentioned. I drop a link to the program in the chat if folks want to follow up and get into more detail. Um, we got about 7 minutes left. I want to touch on this topic because this is another one that I think a lot of people are confused about, or don't really know how to approach it. Business credit, right? So we have our personal credit, we have our FICO credit score, but on the business side, on the other side of the veil, if you will, there is a business credit profile that exists. And how we're able to build and grow that and leverage that in a way that then supports us in the ongoing growth of our business is really, really important. So Armand, if you could share with the audience a little more about, one, how business credit is different from our personal FICO credit, but then also just what are some like small steps that people can take to begin building that business credit in a way that helps them to support the growth of their business. And JQ, feel free to jump in if you got something to add too.
Yeah, that's a trendy topic because everywhere you look at on social media, there's someone talking about how you could leverage business credit to acquire, assets, cars, houses, all kinds of
Right.
different things, right? Ultimately, business credit is different and in the same as personal credit, right? Of course, personal credit is tied to an individual and tied to their social security number, which is issued by the Social Security Administration, right?
Right.
Same thing with a business. A business is actually legally described as a legal person, right?
Mhm.
A business is actually a legal person that also has a 9-digit identification number that received from the government. In this case, it's the IRS, your EIN number. So as a business, when you establish yourself and obtain an EIN number and set up your articles with the state, you are then considered a legal person. So that entity itself becomes a legal person that could then engage in commerce and then create those relationships with vendors and other entities to create some type of credibility, which is then considered business credit. Um, just like your personal credit, you have to engage with businesses, companies, and those businesses report to the reporting agencies to build your credit profile, which ultimately is quantified as a number, which we consider your credit score. Same exact thing with the business on the business side. Your EIN number, as you start engaging with banks and credit card companies and other suppliers and vendors, you then establish the same track record and establishing of trade lines that you then are given a credit score by either, so Dun and Bradstreet is probably the largest and most well-known business credit organization, business reporting agency out there, but Experian and Equifax also do the same thing at this point. So there's really no shortcuts around it. A lot of times, people talk about, hey, we can help you establish business credit in 90 days or 6 months. Yeah, in all fair, you can establish these, accounts with Uline or some of these, vendors that will allow you to report on your purchases on your credit bureaus to help build your business credit. But ultimately, business credit is only relevant if your business is actually generating revenue and actually
Mm.
operation, right? Because ultimately, no one's going to give you any type of substantial money without you being able to prove that you can actually pay it back, right? You got to have
Right.
some type of cash flow. So it's not just about business credit alone. It's also about the ability to actually generate revenue with your business that you can substantiate to a lender or to an organization that's willing to provide you credit that you actually can repay back the credit. So that's, I think, probably the biggest misconception is that you can build business credit and get all these benefits without having to actually have a business that's actually profitable and making money to be able to substantiate your ability to pay back the creditors.
Got you. No, that's totally helpful. JQ, what about you from a business credit perspective? how have you been able to leverage it to grow your respective businesses?
So I haven't actually used that to leverage anything yet. But again, as much as I possibly can, I put into my business or business, my different businesses. And again, a lot of it's more strategic than anything else.
Yeah.
Is very little things that I put in my name these days. If there's a way that I don't have to, because again, at the end of the day, you just always you want to always protect yourself. And there's a whole lot of different ways. I mean, and even just like with business insurance, I mean, that's something we haven't talked about, which most people don't, small businesses has to. I mean, if you don't have business insurance, I strongly recommend you get that. Most businesses don't, and some of them don't get it until they actually like need it. But you don't want people coming after, because the reality is if somebody comes after your LLC for whatever reason, right? You have a certain amount of money that is a part of that, that protects you. But then above that, they can then go after your personal assets. And so you want to make sure you have insurance that is covering you for any kind of lawsuits or any kind of situations that you may or may not know about. So I would strongly recommend when you start a business, just as you get insurance for your car and you get insurance for your house, home owner insurance or rental insurance, to make sure you get business insurance.
Absolutely. Absolutely.
And JQ, and I appreciate you actually,
ahead.
and I appreciate the fact that your transparency and the fact that you've not leveraged business credit to do business, right? Because a lot of times people believe that it's some type of a hurdle that they have to cross to be able to successfully conduct business, and it's really not. You really just have to start operating a business with a good product, good service that is there's a demand in the marketplace, and begin generating revenue. Your business credit just naturally builds itself based on your ability to perform and run a successful business. Because as you're conducting business, like you said, you don't have things in your name. If you have to buy a vehicle, get credit cards, that automatically is reported. Dun & Bradstreet is the largest collective of information on the planet. They already are collecting this information, and just by proxy, if you're operating in business, though your business credit will grow, by proxy, just on its own, organically.
Absolutely. Now that makes total sense. Fellas, I know we are at the end of our hour. Before we go, I want you all to share with the audience how they can follow up with you, what you got going on in your respective businesses, and then we'll wrap it up. So JQ, take it away.
All right. So you can find me on jonathanquarles.com, JONATHANQUARLES.com. And then from there, all of my businesses, my platforms, my book, everything you can just find me all there. Social media, all that good stuff is there.
Good deal. Thank you, JQ. Armand?
Yes, you could find us at thelevanter.com. That's THELEVANTER.com. We're a full service accounting and tax firm. And from our website, you'll be able to find ways to contact us via social media, email, and so on and so forth.
I love it. Before we wrap, if you're watching this and you're not following Business Done Better, subscribe on YouTube, follow on Instagram at Staten & Co, STATEN and CO. Follow us. We got more of this coming. We're going to do this every month. It'll be a different group of friends, but we're going to be touching on different subject matters that are pertinent to the small business owner, because we want to make sure that we are equipping and empowering entrepreneurs as you all go out of your respective journeys. So Jonathan, Armand, again, thank you so much for joining me today. And I'm sure this won't be the last time we connect here.
All right. Thank you, Bobby.
Y'all have a good one.
You too.